Welcome everyone to CADAF panel dedicated to art investment in the digital age. My name is Giulia Archetti and I'm part of the CADAF team, and I'm very happy to be moderating today's panel. Thank you and welcome to our speakers today: Kate Vass of Kate Vass Gallery, Jessica Davidson of Davidson Art Advisory, Christine Bouron of PIX, and Christophe Spaniers, Associate Professor of Finance at HEC. So art investment. I worked in the art industry for 15 years and mostly in the secondary market, so in the commercial side of the art industry. And I was also able to witness a change in the last 10 years, certainly post-2008, in the approach towards sort of the art market. And the change was that a lot of the products that were usually found in the financial markets now were being adapted to fit the art market. Now, to give an example, perhaps to the viewers, of what we mean by financial products, one that might be familiar is probably art lending. So the possibility of borrowing funds against a particular work of art. So now I'm going to ask sort of a question, and maybe it is a little bit of a provocative question, but I wonder, can we now fully say that art has entered the realm of asset classes, which means that collectors or investors can certainly buy for pleasure or for emotional investment, but also they can add diversification to their portfolio? I don't know, Christine, would you like to take this first question?
Sure. Well, and first, thank you, Giulia, for inviting me on this panel. To answer your question, I think we can definitely see that there is huge appetite on the side of potential investor to invest in the art market. I mean, this is a very appealing proposal because the art market is still interesting. You know, sometimes some of the asset class in which investors may look at investing are obscure, difficult to understand. The art market is colorful, fascinating, and definitely a world in which a lot of people want to participate in. So definitely huge appetite. In terms of saying that the art is an asset class, I think there is still a long road ahead of us, because I think there still are a lot of impediment to considering art as an asset class. You know, the first one that comes to mind is definitely the transparency. I mean, for investors to be able to judge their investment, they need to have data and be able to analyze it and understand it. The second one is regulation. It is important to, when you invest, and especially you take a large position, it is important to know that you are dealing in a regulated market. That definitely is not necessity, but that definitely facilitate the investment. So I think we are on the path. There are a lot of effort. There's a lot of goodwill, but there's a lot of work still ahead of us to make it a true investment proposition.
Shall I jump in, maybe?
Yes, of course. Yes.
So I think I largely agree, right? I think art is definitely an investment. It can definitely be an asset. I think it will probably never be like a real asset class for most professional investors, because the asset, I mean, art as a market is probably too small just overall for professional investment. Also, the works are illiquid. There's a lot of heterogeneity. So I think for many professional investors, this will never be like a true asset class that they consider next to bonds and stocks and other sort of commodities, for example. But that being said, of course, it can. I mean, I think there's plenty of people who look at art for pleasure and profit. And if you focus for a minute on the financial side of things, it can definitely provide some diversification benefits to wealthy households, right? So I'm not saying that it makes a lot of sense to invest in art solely as an investment. I have my own views on when they make sense. But definitely, I think it's also true that this fits in a larger or a longer term evolution, right? I think we've seen this financialization of the art market for like 5-6 decades now. It started with some of the earliest data sets and earliest price indexes. and then we had sort of some investment funds, and nowadays, of course, there's a whole ecosystem or field of art investment with advisors and data providers and people offering different kinds of investment options. So I think that evolution will continue, but I think we should never expect art to be an asset class that sort of the biggest institutional investors will really invest in, because that's just because the market is too small, right? I mean, some of the biggest investors, they have many billions to invest, and then the market becomes a bit too small.
And I would,
yes, go ahead.
I was going to add to that. I agree wholeheartedly with what Christine and Christophe both said. I think when you think about investing in art as well, it's most kind of productive to think about it as one component of a diversified strategy. So, you know, when you really look at the top end of the market, when you're thinking about investing in blue chip art and that as being a very strong store of value over time, a safe place to sort of hedge against inflations and to compensate for correlations in the market, that's one aspect of it. But another is kind of on the wealth management side of things, when you kind of integrate art investments into a broader portfolio as a way of diversifying, that seems to be a productive and a strategy that's becoming more and more popular, kind of from an institutional standpoint. But then from a personal standpoint, if you're thinking about, you know, investing yourself in a private collection, I think that's where it becomes very interesting, because you're buying not only with investment in mind, but you're also investing in culture, you're investing in artists, and particularly with emerging and mid-career artists whose markets might not have been established yet. But I think when you think of, yeah, the spectrum from private investment to really institutional investment to long-term investment, they all have different considerations. But like Christophe said, I think when you think about it in terms of a really traditional asset class, I think we're a little far off from that.
I mean, one of the things that, Jessica, that you said just now, and I want to go back after also to something about transparency. But I was actually quite surprised in the last few months to notice how the art market didn't seem to stop despite the financial markets sort of dropping. So I wonder what you think actually about the correlation, because we did see a hit in 2008. I mean, a big dip in the market and the slow growth. That didn't seem to happen now. What do you think that is? Or do the markets actually are sort of go in a different direction? Do you think investors or collector do feel that art is perhaps a safer option to still buy when the financial markets are down?
What do you mean the market didn't stop?
Can I say something? I think if I add this thing, it may clarify a few things. You know, as art has no correlation to the stock market, it means that paintings can go up in value even when the market crashes, making a good diversification for any kind of portfolio. But, you know, it's not a safe haven. Definitely, you know, if everything collapses like what we've been seeing during the COVID virus, you know, in 19, that the volatility on the art on any markets, financial markets, there was no safe haven. The cryptocurrencies were going down, the normal currencies everywhere, each economy has suffered. You know, so I don't think in this sense, you know, art has colorated of being in a safe haven. I had a request recently from one of my clients, for example, who wanted to do the art lending against some modern art and some older paintings. And of course, you know, it's been extremely difficult to search and to find companies who would agree to do the lending against old masters, because it's not trendy anymore, you know, so this is also a problem. And I think, you know, when everything is kind of crashing down, or we have such an unexpected problem like pandemia, you know, then of course none of the assets, if we consider art as an asset, is a safe haven, you know. And also I think art probably it's not really a financial asset as a classical understanding, but it's a definitely an asset in terms of different type of value, maybe, because the value which when you collect and when you acquire art, that you also add emotional value probably, which we can't really track.
Thank you. I just want to I just want to quickly say to Christine, because she asked that, what do you mean the market didn't stop? I summarize it, but I mean, growth of online sales, and I also have would like to have your thoughts on the development of online sales that have been really successful in the last few months. And Paris, Christie's Paris, for example, had a live sales that was also fairly successful revenue wise. So I mean, there was still demand and supply. So there were still artworks that could be gathered for sale. So there was confidence from people selling, but also buyers, which perhaps they might want it. Maybe they were looking for sort of a deal or to buy something below market value, but there were still buyers out there. That was what I meant with my market didn't stop.
But no, I was asking because definitely there has been sales that have been successful, but so what we do at PIEX, we track the sales at Christie's, Sotheby's, and Phillips all over the world, and we track them on an ongoing basis. And we've been doing that for during this period with COVID-19, and we've been doing a lot of research comparing online sales, live sales, and all the sales month by month. And we have this index where we look at what's called the 12 months rolling revenue of the top 3 auction houses. So because auction houses have revenue that is very different from one month to another month, it's very difficult to compare them. But if you take the past 12 months, because they have a calendar schedule, you can really do a great comparison and see where the market is. And so using that criteria, over the past few months, the sales really, really fell. So I based on our data, I don't think we can say that this period has been extremely successful for the art market, at least for the top 3 auction houses. There have been some successes, definitely, but not every sale has been successful, and especially they have not generated as much revenue as live sales.
No, yes.
So I can, if you want, I can show you our index and you can see where it is right now.
Yes, that would be, of course. Yes, that would be great.
It's, let me just, so, you may, so this is, every dot on this line is the past 12 months. So you can see that the highest past 12 months was on June 15, and then it went down until February 17. And then we went back up until September 18. And then the market the sales at the top 3 auction houses started to go down. And then you have the May 2020 point, which is, here on this graph, it starts in 2010, it's the lowest point ever for that period. So definitely the sales have not generated as much as the traditional sale would have had it not been for COVID-19. So that's...
So I'd just like to add something on sort of the 2 previous contributions. I think, first of all, I agree with Christine that the tool here should be sort of good statistical analysis. And I think there's always a danger of looking at some anecdotes, like some online sales or some that go well and then conclude like, look, there's not much of an effect. I think honestly, it just from a statistical standpoint, it's just a bit too soon to tell, right? So the data are still coming in, the sales are still happening. I think also this is a market where there's a lag both on the supply and on the demand side, where the sales that we see now, these are consignments for a while ago. The bidders that we see now, that maybe people who decided that they wanted to buy some art a few months ago. So I think it's really a bit too early to tell. I think I would not be surprised if the market is substantially hit. I mean, I think historically, There is a substantial correlation between the stock market and the art market. So at least in terms of prices, but also in terms of volume. It's sometimes hard to see because there is this lead lag effects, right? So a drop in the stock market today may only be reflected in the art market in half a year or a year. But historically, if you take into account such sort of statistical issues, there's actually quite a substantial relation between the stock market and the art market. Okay, the stock market now has also rebounded quite a bit, right? But more generally, I think there's a relation between the macroeconomy and the art market. So if the macroeconomy is going to be hit, if top income earners are going to be hit, if stockholders are hit, the art market is going to be hit. There's zero doubt about that. I think that substitution effect that people sometimes point to, like people are scared in financial markets, so they'll start investing in art, right? That's the safe haven. I think that's a rather marginal effect, to be honest. Yes, people look to diversify, but wealthy people, smart people always look to diversify. So I think that sort of substitution effect is relatively limited. I think there's mainly a luxury consumption effect, which makes that if people have less money to spend, artworks, well, the art market will suffer. I think the art market will suffer now as well. So that's my...
And if I may add to Christoph's point, you know, this whole question about the correlation of the art market with the financial market is fascinating, because I agree with Christoph that it's the data on one hand, it shows that it is correlated, but then there are some particularities, I think, to the art market that makes it behave a bit differently. So, for example, you know, in the stock market, if the market goes down, you can see a lot of stockholders starting to sell because they want to get their liquidity as soon as possible, and definitely before it goes too low. In the art market, actually, we find that the behavior of a lot of art collectors is completely different. When the market goes down, actually, a lot of people do not sell on purpose. And often when we see the market go down, it is because there are much less art for sale because of the behavior of the seller, because they do not want to affect the value. So this actually has a huge impact, because when art is appraised by appraiser, they need a data point to do that. And if no art is traded, then the value of the art doesn't change. So it's a very, very different...
well, so the fundamental value, the market value may change, but you don't see it, right? You don't see any data points.
You
So
don't see the points,
it may seem as if nothing has changed, while in reality things have changed. And
well, things have changed, but if you talk with appraisers, often they tell you, we're not, you know, I need data. Appraisal is based on data. If I don't have data, I can't really change this.
Yes, but I think appraisers are known both in the art and the real estate market for being very sticky, right? To issue sticky appraisals. So you should appraisals probably follow through market values or fundamental values with a substantial lag. So it's true that when the market goes down, appraisals may stay relatively constant for a while, but at some point they'll go down as well.
No, and believe me, I am all for transparency and prices to reflect the current state of the market. But I think there are special mechanisms in the art market that explain why it's not moving exactly as you said, as fast, while there is this lag often that we see.
Great. I wonder if Jessica and Kate had anything to add, but this is I think I could go on and talk about this for definitely more than the hour that we have, because it's very interesting. But I was wondering also, you said sort of online sales. We talked a little bit about online sales transparency. And Christoph, you said that it's too early to say if online sales will be maybe the future. There was a quote by Guillaume Cerutti that I wrote down, CEO of Christie's, that said that this was a moment of truth for online sales, because then it became sort of the parachute for auction houses who couldn't have live sales, but also everyone going online. So galleries who didn't have online sales before, quickly changed their business model, art fairs, auction houses increasing the sales. So we are going towards more transparency. So perhaps actually the benefit of this period will be seen later on, or this is finally the start of more transparency and a more inviting art world, also for sort of young collectors. But I was wondering, sort of from Jessica and Kate, if they have noticed anything, any particular attitude in collectors this past few months, sort of any change, any positive change?
Yeah, I'll jump in there. So I will say, just to go back to the kind of the online art market. I mean, when you look at the online art market versus the traditional brick and mortar businesses, only 10% of the annual turnover in the industry takes place online. And I think the most recent statistic for last year, if you look at the 310,000 art businesses and the total global annual turnover, the average art business is generating a revenue of around $200,000, which is very, very low, right, for a business. So given those low margins and the high cost of doing business, many of these businesses look at online as a gamble that they really can't afford to take. So, in terms of experimenting with online sales channels, they, I think, traditionally looked at it, and certainly myself when I directed galleries, as kind of an extension of the brick and mortar program, but not something to really double down on and invest heavily in for their business, again, operating on pretty small margins. I think what's happened with COVID-19 is that this is forcing a lot of galleries to embrace the digital sphere in a way that they haven't had to before, out of necessity, and also because their physical spaces are being shuttered. So it's really the only way that they're reaching out to their bases and audiences. But I think what's happened is the adoption and some of the technologies and some of the companies who have kind of been under the radar, they've accelerated their business development. There's been a lot of interesting developments in terms of augmented reality and virtual reality, and really trying to create this experience of visualizing and experiencing the artwork in person as best as you can without physically seeing it. But just as everyone's having to kind of cope with the reality of interacting online and seeing things online, I've seen, at least for my collectors, that shift taking place gradually and a little bit trepidatiously perhaps. But Julia, to your point, exactly as you said, the transparency I think is a key element of this, and people feel more comfortable sort of doing their research, doing due diligence. The smart ones, of course, still consulting with experts in their field. But I think that it's actually been a very good thing. And I have certain clients who have kind of pushed pause on their art buying, but are still constantly engaged with art, looking online, viewing the online auctions, browsing some of the e-commerce marketplaces, and just me sharing information virtually with them as well. So I think it's very personal in terms of how people are reacting to the current situation, but the online sphere and what's available now to everybody, I think is going to be good for all.
I mean, my view is that in many traditional auction houses, the online sales don't give much more transparency than the traditional sales. I mean, in a way, it's still the same format. You don't know the reserve price. You don't know who's selling. So I think that online sales do not necessarily per se lead to higher transparency. I think that there's other business models and other sort of initiatives now that lead to more transparency. But I think the traditional auction houses shifting their sales from brick and mortar auction rooms to online, that in itself does not do anything in my view, to transparency.
Gallery sales now, galleries that are moving to online.
Galleries, yes, right. So I think that
art fairs too.
But so I think you see that with a lot of fairs as well, and galleries, and there are new initiatives and new business models. I think what I want to say is that, I mean, a lot of the people who've looked at sort of financial aspects of art, they focus on auctions, and I'm just trying to make the point that an auction house moving from brick and mortar to online, that in itself does not do much to transparency. I think the increase in transparency will probably come from other sides of the market.
You're absolutely right, Christoph. I agree with you. Like art world is the most opaque world, and it's very, very conservative, and it's very, very closed. And I think it's one of the most reluctant markets left, you know, to embrace the technological disruption and to be more transparent, even though we see a big change in the financial markets, you know, that the transparency took place already for the last decades. And, you know, there is an exchange of information and everything, you know, so even the Swiss banks, you know, became very transparent and open information about the clients and things like that, you know, so, and still, you know, we see this kind of non-transparency or reluctancy to be transparent from the art market. And there is a reason why, you know. Even though I'm like the worst person to ask because my gallery is specializing on art and technology, and I'm the one, you know, who is pushing the traditional art world to be more transparent with the blockchain and with through various technologies, and also by educating new generation. I see that they are mostly cherishing, you know, if you are transparent to them and the prices is out there, and you know, like the artist gets their commissions and royalties, you know, for the secondary market. So I mean, I think, you know, the shift will be taking place anyhow towards transparency, but it's not an easy process. It's also not a fast process, but I think, you know, COVID was just kind of a kick, you know, for the traditional art world to embrace that the change has to happen. And of course, you know, auction houses, they've been already doing online sales. No, it's not happening this year, you know. We've been doing the online auctions for the last I don't know, decade, you know. Also digital art, you know, Philips introduced the auction for digital art many years ago. I think, you know, the galleries were more kind of reluctant, you know, also to sell online. But again, even if they sell online, it does not give a transparency. If they would sell on blockchain, that would probably give more transparency.
Well, I think you're raising a good point, if I may. So I think often people complain about transparency or lack of transparency in the art market. I think people who call for more transparency, it would be useful if you can suggest what exactly you want, right? What exactly is the piece of information or the kind of transparency that you want? Because that's not always very clear, right? And I think it's so, people make the comparisons to financial markets, but let's be honest, also in financial markets, there's a lot of intransparency, right? There's dark pools, there's bond trading, there's over-the-counter trading. So I'm not always convinced by this argument that financial markets are much more transparent. But in any case, even ignoring that, I think it would be useful that people who call for more transparency in the art market are very clear about what is the kind of transparency that they think would be useful. Because there's lots of transparency that would probably not be useful. Right?
Well, if you compare financial markets, not so transparent as art market. You know, for example, you know, if you go to the stock exchange and you look at the listed companies, at least you can track the price, right? You see the price or the value.
Yeah, but that's the nature of the goods, right? It's traded frequently, while an artwork is not traded.
You see the past performance, right?
Yes.
Exactly. You see, but usually, you know, like, of course, it's not accessible, the information about the clients, but if the bank needs to know, the bank usually knows the client. KYC and AML and all these kind of tools were applied not yesterday, right?
Well, for stock trading, I think it's hard to know who's trading what. But I think you're rightly pointing out that, of course, the history of prices is transparent.
Yeah.
For artworks, it's true that the history is not always so transparent.
Exactly. In a structured product, the value of underlying asset is also known, right? You can track the value of underlying asset, at least somehow.
We're not going to hijack Julia's panel to talk about structured products.
No, but I'm telling you, like, usually the value of financial asset is kind of, you know the price, right? I mean, one way or the other, you can find out the price.
Well, I think to your point, Christoph, about what people really want to know, I mean, we only have the public auction records to use as data points, right? And that represents less than half of the market. So the dealer sales, the private sales, you know, the gallery model, this is, I think, where the price secrecy or, you know, the transparency kind of comes into play. And let's be honest, I mean, pricing artwork in the primary market can be quite arbitrary. I mean, you know, you're assigning value to something that didn't exist before, and you know, you're trying to find comparables, and you know, there is a formula to it, but it's not an exact science. So I think just pricing in general in the art market, especially from someone coming at it from another industry and looking to invest and who's more familiar with traditional assets and numeric statistical formulas, kind of looks at the art market and the pricing and it's kind of like, well, how did you get to that number? How did you arrive at that figure? Why is this artist a good investment? And these are not all quantifiable metrics. So I think to a certain degree, even if someone asked for the right, you know, information, what they really wanted to see transparency of, we in the art market might not always have a suitable answer. Just the nature of the business, I think.
And to add to that, I mean, Jessica, definitely, I agree with you that there is all the private side of the market, there's no data at all. But even on the public side, you know, I'm someone who wants more transparency. And I'll give you very concrete examples of what I would love to see. Katerina, you said that, you know, online sales have started a long time ago at auctions, but I can tell you, as someone who's been tracking online sales and live sales for every day, I can tell you that most of the results of online sales until 2017 were not published. These online sales that we would list before the auctions would just disappear after the auctions, and there would never be any results. Since 2017, it's better. Now we see more results being published, but actually, since 2019, we went step back, and there are big sales at the auction houses now for which the results are not published. You know, one sales that had a very high profile was the Hong Kong sale, naming Confidence, where no results were published at all, or just simply one of the auction house does this weekly watch sales, and there's no information about the price at which the lots are bought. There's absolutely no price information. So I think this really hurts the market. And you said something that really hit with me, Christophe, at the beginning. You said it's a very small market, and I agree with you. And I think this is the big problem. This market is small and will remain small until it provides more information. And that's why transparency is so important, because we need that.
I agree that also from a research side, of course, the art market, I mean, I've been doing research on the art market for a while, but getting good data is hard, right? Because I think that it goes maybe a bit beyond the step of transparency, but so there's a lot of auction data out there, but that doesn't mean it's easy to gather, collect, analyze, right? So you have to find your way around these different data providers or data sources. And I think one thing that is clearly stopping more research happening is just the lack of sort of public data or some data source that people can use to do their own research. Right. I mean, I think people in the market and some people in the academia like myself, we find our way and we get to access the data. But I cannot count the number of times that I had a graduate student or a researcher contacting me and asking me where I got my data, how can they get access to data. And typically, I cannot also not share the data that I've collected or that I've got access to. But I think it's clearly stopping more research from happening, that there's not more, I mean, the data are there, so it's not that it's a lack of transparency. You can just go online and see what things sell for. I mean, if I talk about auctions, right? That doesn't mean that it's easy to gather and to analyze.
And not all the data is there. You know,
not even all the data, but I mean, there's already a lot of data out there, but it's not because the data are out there that a researcher can easily, I mean, with a researcher, I mean, both an academic or somebody, a practitioner, but that somebody who wants to do research can easily, let's say, download the data, analyze the data. That's not always straightforward.
Right.
No, clearly. I mean, we spend our day collecting data. We collect it directly from the auction houses.
Mm-hmm. But there's plenty of people. I mean, we're reinventing the wheel over and over again, because there's plenty of people collecting data from auction houses.
Yeah, but they don't always have full exhaustive data. You know, like, for example, one piece of data that you cannot find in many places is the lots that didn't sell. Where do you find this?
Yes, so yes, there's so many things, but you're all absolutely right. Just to jump in, so yes, it's true, online sales results were not published. I actually remember the time where it was announced that finally ArtPrice or ArtNet were going to publish the prices. But funnily enough, and this is also why I think also maybe Guillaume Cerutti said this, it's changing. It was already changing, but the perception of online sale is now online sales for auction houses, for galleries, for art fairs generally. But before, within auction houses, online sales were considered second tier best. And oftentimes clients did not want the results. It was actually something that clients welcomed, the fact that the results would disappear and nobody would know the performance of a particular work sold at auction, because it would be the case, and I think I'm not saying anything confidential now, but a lot of the times there were other big collection where the masterpieces would go on the live sales, and then the remaining lower value lots would be put on online sales. This will no longer be the case. I feel that online sales will actually be parallel to live sales and would complement the live sales rather than being seen as a sort of second best. And in terms of data, yes, I wanted to sort of agree with you. There's definitely more than that primary and secondary market can do to make the data more usable. There is definitely more data that auction houses, for example, and I'm sure galleries too, hold, but it's not in a readable way. It's not compiled, it's not clear, it's not classified in the right way. So I think it could help everyone to also have
and I think
centralized data set that everyone can access.
And I think, of course, auction houses or market players may be reluctant to share like the latest data, right? There's competitive advantages of having certain data sets. But I think if you think about already, I'm talking as a nerdy academic here, right? But if you want to sort of give a boost to research on art markets, then at least publicize some old data, right? Publicize, galleries, dealers, auction houses, try to make more data available about everything until, let's say, 5 years ago or 10 years ago. That would already help us a lot in getting to a better understanding of how prices are formed in these markets, who are the players in these markets, how is this market even developed. But currently, I think there's sort of a lack of knowledge of how this market works, how the primary relates to the secondary market, because anybody who wants to do research is sort of left in the dark, right? Because there's no data to work with. So this is my call for openness when it comes to
but you're right, but
historical data at least.
But I don't know if, as I said, well, again, I haven't worked in the gallery, so I don't want to speak for them, but certainly it's not easy to go back and collate historical data because at the time it wasn't stored in the right way. Now, obviously, everyone is focusing on data, auction houses and galleries as well, because data is power, so they are keeping it in a different way and they are collating in a different way. Then they need to share it, yes.
There is a new law which came to force from 1st of January 2020 that every gallery, of course, according to its location, has to report and do the KYC, which means know your client and comply with certain rules and regulations. In Germany, I think it's 2,000 euros only. So the artwork, the price of artwork is rather low, and you already have to know your customer and have to comply with the certain regulations. In Switzerland, it's 10,000 Swiss francs. And I think in the United States, it's $10,000. So, from if you do not comply and if you do not collect this data and be transparent about it, once you have an audit, you might have experienced some issues, So I guess by applying the certain rules, to the art market and to regulate the art market, probably it will also bring additional transparency and also maybe a bit of more data for you guys to collect. Because for now, galleries, they are very, very reluctant to share anything. And I am the one who is also I opened up my gallery with a message that I would like to bring a different type of gallery you know, where I'm very transparent, my prices are open, my statistics is open, I am forward towards the most transparency towards the clients, towards artists and everything, because I support the new generation who are collecting only when they really, really know what they collect and what they pay is the right price, you know. So I really think, you know, by adding up maybe additional regulatory things, you know, to the art market will help a lot, and will oblige a lot of institutions and galleries as well, apart from auction houses, of course, you know, to comply with the certain rules and also provide the certain data.
I totally agree with Katerina, and I completely share your enthusiasm about the arrival of the anti-money laundering law. And I think while unfortunately in the UK, there is no requirement to publish the information. So the dealers have to have the information, but they keep it for themselves. So I'm not expecting a lot of data coming out too soon from that. But at least I think what it's going to do is it's going to change a little bit the state of mind, where before it was kind of a state of secrecy, but now because the clients will have to divulge their information, I think they will feel much more comfortable asking questions. And
you see what's happening, Christine. It's absolutely right. You know, the dealers probably they are reluctant to provide the data because they are not obliged to provide it in a public way, right?
Yeah.
But the clients will be the one asking for that eventually.
Exactly. I think they will be asking for data.
Exactly. And as soon as the clients are asking, the dealers will have no choice but to provide them with the service and to provide them with the transparency.
Yeah, and I think that's a super positive change of mentality.
Hopefully.
We'll see. Talking about showing data, we've been tracking the performance of online sales at the top 3 auction houses. And if you're interested, I'll be very happy to show it to you.
We'd love to see. Yes.
No, this is data. This is so let me so oh sorry. So this is here we have first in number of online sales. So you know, in March, we had about 60% of the sales at the top 3 auction houses that were purely online. So when there's no auctioneer and it's a sale that starts a bit before. In April, we had 100% of the sales being purely online. And on the graph, you can see we separate between the pure online sale and then what we call the live sale, whether they're evening sales or day sales. So you can see that this was definitely a huge change versus the years before, where you know before actually 2018 there were a few online sales, but you could hardly see them in April 2017, and then in 2020 we have 100% of online sales. And then in May there were a few live sales that were able to take place at Sotheby's and Christie's, and that led us to 93% of the sales being online. So that's in terms of number of auctions that were purely online versus the live sales. Look at the results. You know, what did these sales generate for the auction houses? So first, if I look at the first quarter, which is January, February, March, here, I mean, we only had the impact of COVID-19 on the end of the month of March, but it still led us to have almost 50% of the sales being online. Here is the revenue generated by these online sales. It is quite marginal, but that's because the evening sales, as you can see, generate huge income for the auction houses. Now, if I look at the following months, so I mean, we talked about that. I mean, for us, we consider these months being the torture test, because this is, as you said, Julia, it's only online sales. So it's a very good way to see how they perform. And as we saw in April, it was 100% of online sales. So if you compare the revenue generated in April versus the year before, in April, that's what you see. So these online sales the revenue generated by these online sales was overall not to the scale of the revenue that is generated by the regular live sale. And here is the results for May, which obviously is even more dramatic because usually in May you have these big live evening sales in New York. Here they did not happen, they were postponed. But still, the sales that were there did not generate the revenue that was traditionally generated in that month. So it's, and then maybe, you know, what I think is interesting is to compare the revenue of these online sales. So on this graph, you have on the x-axis the number of lots that are in auctions, and each dot is one auction, online auction. And the white dots are online auctions before COVID-19, so before the second part of March. And the gold dots are online auction after COVID-19. So the first thing we noted, which is really interesting, is that most of the online auctions that were arranged by the auction houses after COVID-19 had much less lots than before COVID-19. So it could be because not that many of their sellers wanted to sell online. As you mentioned, Julia, sometimes there's a resistance. But it's interesting, I mean, like for example, this watch online sales is every week and it's only like about 20, 30 lots. And it's every week. So rather than doing one big online sale, the auction houses decided to do a lot of small online sales. So that was interesting. And then one particular sale that is interesting, you can see the one that performed the most. It was the Contemporary Art Day online auction, which was arranged by Sotheby's, and it generated 13.7 million, which you can see is a true record for online sale. I mean, this is the auction that, as of end of May, generated the largest revenue online. And another sale that you can see there is the Impressionist and Modern Art Day sale, which was also online, and it generated 9.9 million. So also one of the top records, which is great for an online sale. But now, you know, these sales were they were arranged to kind of replace the traditional Contemporary Art Day sale that takes place in New York, usually during the months of May. And let me show you what these sales usually generate. So here you've got the revenue over the past 3 years. And in 2019, that sale generated more than $100 million. And same thing for the Impressionist sale, which in 2019 generated almost $45 million. So there is something that auction houses manage to do in a live sale that they haven't yet fully figured out how to do it in a pure online sale. And so overall, that's why the results of these online sales have not, I think in some ways have been a bit disappointing. And that's why the auction houses are in a hurry to go back to their live sale, or at least some kind of hybrid format where it is online, but also it is in live format with an auctioneer.
I mean, I wonder, and I don't know if you have those stats of percentage of sold lots in online sales, whether it performed better.
Yeah, we do have it. So they actually were kind of in line with traditional sale, which is a very good sign.
Yeah.
That, you know, the number of lots per auction was much less. So
Yes.
I think by decreasing the offering, you also decrease the chance, and which is fine. But then the question is, how sustainable is it and how scalable is it? Because I think the big promise of the online sale is that now you can scale it up. Now you're not limited by how many hours in a day. You can have 50 online sales taking place at the same time, 100 online sales, and you can really grow the art market. But if your online sale only works because there's a small number of lots, then, you know, there's an issue of scale.
So a couple of thoughts on this, and also I wanted to finish on a note for digital art, actually related to this. I think there is a limit. There will always be, I mean, no, I don't want to say always, anything can change, but at the moment, there is a limit of perhaps value to online sales. So masterpieces will always tend to go for auction houses a decision into live sales. There might be clients who are also hesitant to have a masterpiece work sold online. There is the fact that you cannot view, even though some auction houses in the past have had views for online sales or partial views for some lots. It shouldn't happen. Online sales should be an online sales, and this month proved that you can just have an online sales without a view, but above a certain value, collectors might want to see the artworks in the flesh, for example.
But you could go to more hybrid models there, right? So why not have combined views with an online sale? I don't see why that would not be possible. I also don't see why auction houses shouldn't try. Why not sell high? I mean, I think, of course, maybe it's the consigners that are reluctant, but I think at some point this reluctance gets a bit ridiculous, right? Why not just try? And I don't really see a good reason why it shouldn't work online, why it should be physically sold in London or New York. I don't think there's any good reason for that, especially for high value items, because actually high value items, you may actually know pretty well. I mean, there's a lot of documentation, there's a lot of research. You may actually know pretty well what you're buying. So I don't see why it cannot happen. And I think it would happen if this pandemic lasts
continued.
So.
Yeah. Well, it's sort of happening. It's a little bit of hybrid because the sales that are happening in June, July, they're sort of like a relay. But I think they're having a sort of a view, like with people coming into auction houses now. But the sales are happening not with people in the room. But one of the things, and I wanted to tag on and say, could this also be actually the chance? And I wanted to give a bit shout out to digital art now to actually also maybe finally open up the market to a type of art that is not necessarily physical art, that is born online, it's born with new media, and is sold also online. And of course, I mean, Jessica, Kate, I don't know what you think about it, but it seems like a good opportunity for digital art. Oh, you're mute.
I just want to add up a few things about to comment a little bit about the physical auction sales.
Yes.
You can't replicate what's going on in the room once the physical sales, or even Italian, for example, the Italian sales in Christie's or in Sotheby's in London, for example, of Italian contemporary art, you just can't replicate that online. The same hype which is going, emotional kind of increase, with all Italians bidding, screaming. And then, the auction house goes, yes, 1, 2, 3, okay, yes, sold. And then you're like, you have a telephone bid coming in, and you have like a internet bid coming in, and then you feel this agitation in the room. So I think this kind of feeling, of course, you can't replicate online. So probably this becomes very emotional as well. It's some kind of experience that the auction house creates. That's why probably they also kind of sell much better when the real sales at the auction houses happens in New York or London, because there is a whole marketing strategy behind that. They prepare for them. They invite people beforehand, that they come and experience this, old masters or some special unique piece, that you can view it, you can talk about it, you can feel it, you can smell it. It's a bit different, so they create the whole experience, and it's all a marketing strategy to create this kind of anticipation towards the sales, and then people go out and they're dressed up and they're all kind of, like looking forward for this evening. It's been a whole history about that. I love auction sales, physical ones, even though I'm very pro digital, and pro tech. And I think, I can also buy online, and actually I was bidding online a lot on Christie's and Sotheby's. But there is nothing comparable to this experience. So I think that's also something that should not be missed out when we talk about the physical sales. That's maybe also the big part of why it's so successful.
I think it's a huge part. And actually, you know, to reverse it, I often say there's too much time to think in the current online sale process, because you put your bid and then you wait and then you look if somebody put another bid, and then you know, you can come up with 10,000 reasons why you shouldn't bid again. And it's completely anonymous. Who knows that you bid? So whereas, as you said, Katerina, in a live sale, it's your ego, there's expectation, and that
pushed into this environment. Exactly. You're becoming very competitive because you feel this kind of things going on, and you say, yes, a little bit more. Okay, I'm going to bid, you know.
When you're in the very interesting, you're going to bid yourself. You're just
psychology. Psychology.
I mean, I think this is a very interesting discussion, but I would like to see some, okay, I'm an academic here, right? But I'd like to see some research that says that actually prices are higher in a room than online. I don't know of any sort of decent comparison of where the same items have been sold somewhat close to each other in time, sort of physically and online, right? So I agree that, of course, we have this idea about physical sales, there's the emotions, and people get overwhelmed and they get out of hand, or they don't respect their own budget, but online also has advantages, right? Online attracts potentially more younger buyers who may be reluctant to go to a physical auction house, or who don't want to even bid on the phone, who just appreciate the easiness of clicking and being very rational about it. So I think it would be very interesting to see if somehow doing an experiment or using historical data, whether things sell for more when it's sold physically rather than online or not.
I can tell you that looking at historical data, our data shows that the average price generated by an online sale over the past 4 years has been less than 1 million before COVID-19.
But that's not the same items, right?
Well, but these are contemporary days, like the data I just showed you, but contemporary.
Yeah, but I mean, but the consigners, auction houses choose to which object to offer where. So
you both have a point, actually, you know, because Christoph, you're absolutely right. The auction houses, they have not placed the same items on the online sales as they have placed at the physical sales. So probably it would be a very interesting challenge for the auction house to try to sell online the same quality, for example, contemporary art, and try to see, you know, if the numbers will match.
Yeah, so an economist would say that they should set up some randomized control trial and randomly allocate items to physical or live auctions. They should do this with us. Julia, use your connections.
Yeah, no, we can, certainly. Well, let's do it.
Let's challenge them.
Guys, the data I just showed about the contemporary art day sale online and the contemporary art day sale is the closest we've gone so far to the comparison. And obviously they're not the same items, because every artwork is unique. So you will never have the same item, because even if you look at the same artwork, it will be a different time. So you could get different prices. So, but that comparison of how an contemporary art day online sale performed in the same period versus a contemporary day sale is the closest you can get. And I think the results are pretty dramatic, from 13 million to over 100 million, really gives an indication that so far, it doesn't mean it's not going to change in the future, but so far, the mechanism of a pure online sale does not generate the same volatility as you can see in a live sale.
Yeah.
And I think to Julia's question before, also about perhaps the propensity for people to be more comfortable, you know, viewing art online, but also consuming art online. I think this could be an excellent, you know, time and moment for digital art. And, you know, as the discussion around the online auctions, I think people will always sort of, you know, chase the quality. And if people know, you know, they're going to invest in a piece, whether it's live or online, they're going to go for it. But I think what's happening now is this shift in the way that we are consuming art. And I think it's a fantastic opportunity. And, you know, for CADAF to have taken the initiative and really doubled down on that, on this kind of the temperature of what's happening in the marketplace, and to give digital art a platform, I think it's tremendous. And it's an experiment, right? Where we're going to see, it stands to be, you know, seen how successful it is. But I think now's the moment to really experiment and see what happens. So it's exciting.
Yes, I agree. I agree. So first of all, we'll see you all at CADAF, by the way. So come in, check out the platform. But yes, I think it's and I'm hoping that actually this is a moment of positive change for the art market in very many ways. So stay tuned, I guess. Yes, Christine.
No, I just wanted to say that, I am a huge believer in online sale. And actually, I started one of the first online art gallery back in 1997 in New York. We were called paintingsdirect.com. And by 2000, we represented more than 500 contemporary artists. And we were selling art online already, even before the year 2000. I believe in online sale, and for years, especially at the time, Auction House would say often that it will never work. You will never be able to sell art online. And I do believe it is possible, but I do believe that it's important to find the right format. And that's why, back to our conversation of transparency before, it's important to get the good reading and the good data so that you can understand what works and what doesn't work. Because if you don't know what doesn't work, you cannot make it better. So I do think that long-term, for sure, art will be sold online. There are so many advantages for it. It will be some kind of hybrid, and we have to find it. And that's why we have to work on it. And Jessica, I totally agree with you that it's wonderful that CADAF is offering this platform and looking into it, because it's by sharing and discussing that we can find the right way and go in the right direction. So thank you very much.
Yeah, I think there's also an analogy with business schools here, right? So I think we've always said you cannot recreate the classroom online. And now we've all been forced to start teaching over Zoom. And of course, we're learning what are the best practices. And but I think it's clear that come September, we're not going to go back to the old world again, right? We're gonna take some of the elements that we learned, take some of the things that we learned, and incorporate that in our day-to-day business. And probably going forward, higher education is going to be much more of a hybrid model where some things are done physically and some things are happening online. And I think that's somewhat similar to what we can expect for the art market, where this is a learning experience, and probably going forward, it's going to be more hybrid than it was before.
Well, I want to say that, the digital art sales, there are already many platforms which operate in this market, and they sell digital art and crypto art. And it's not a new business. They've been on the market since 2010, and it's growing, and there are more and more market participants coming in. There are many new type of platforms, online galleries, whatever. Also digital art, if we talk about it, I think it's, to sell and show it online, it kind of seems like a logical way to show and exhibit and sell online the digital version of it. But also when it comes to this, I'm very happy that there is some support from blockchain side, for example, that we can document it in a certain way, because so far there was no certain tool available, for example, to transfer the file, if it's a digital file from the gallery or from the artist to the collector. Encrypted version, this is the only option, but it's a certain way, cybersecurity, and all these things. There was no there was no solution, a beautiful solution to secure this kind of transactions. With blockchain came a new kind of market, like blockchain platforms, where they sell crypto arts, and they are very, very successful. And we see a lot of new type of collectors coming in and buying and selling art online. So I think, at CADAF, we are going to see a mixture of artists from contemporary, not only digital, it's contemporary and digital art fair. So we are going to have a lot of contemporary artists. We are going to have a lot of digital artists who are producing and their practice is only in digital, but also we are going to have a bunch of artists who are creating crypto art and selling on blockchain. That said, I invite you to visit Katela's gallery page, because we are going to have an interesting mixture of all, for any type of collector. And thank you very much for inviting me for this interesting panel. I was very surprised to take part in it.
Thank you, Kate. But thank you, Jessica. Thank you, Christine. Thank you, Christophe, for your time. Let's do it again. So on to the next panel. Let's continue to talk about these topics as well, and also share, your expertise and knowledge and ideas to the art world. Christophe, I'll make some calls for Christie's and suggest an experiment. This is the right time to do it. If we want to do it, let's do it now.
I'd love to do it. Well, thank you, Julia.
Thank you very much.
Yeah.
Well,